Hello, this is Craig Mitchell, your personal mortgage consultant for life. And this video that you're going to watch today is an excerpt from one of my first-time homebuyer seminars. So if you're a first-time homebuyer, this is information you definitely need to know. And even if you're not a first-time homebuyer, I can almost guarantee that most of the information will be new to you, so you can definitely benefit by watching it. If you do have any questions or comments after watching the video, please email me or call me, and my contact information will be provided at the end of the video. Okay, so today we're going to cover closing costs. What are closing costs? Who pays the closing costs? And most importantly, how much is it going to cost you? So first of all, what are closing costs? A closing cost is any cost that is involved in buying your home. You may not know this, but there are about 20 different companies involved in the purchase of your home that all have their hands out asking for money. Just a few that I can think of off the top of my head are a home inspection, a termite inspection, a home warranty, the appraiser. You have 2 realtors involved. You have your mortgage broker or bank or both, the credit reporting company, the flood certification company, your mortgage insurance company, your hazard insurance company, flood insurance if you're in a flood zone, your escrow company, your title company, the outside notary, the county, which charges to record everything. There's probably a few, there's definitely a few more, but those are the ones I can think of off the top of my head. The good news for you is that a good real estate agent can negotiate with the seller to pay most and sometimes all of the closing costs. Now, the closing costs are on top of your required down payment, which is why working with a good real estate agent is important, because if your realtor is not good at negotiating your contract, you will get stuck paying for most of the closing costs, which can run between 3 to 5% of the purchase price. So on a $200,000 house, the closing costs would run between $6,000 to $10,000. Now, I'm not a realtor, but I do know some good realtors that will make sure the seller pays all the closing costs. So if you need a referral, just give me a call or shoot me an email. Now, there are 2 types of closing costs. There are closing costs that you're going to have to pay out of your pocket at the very beginning before you buy your house, and then there are closing costs that you have to pay at the very end after you buy your home. Now, the upfront closing costs are almost always going to come out of your pocket, so let's cover those first. First, you have an appraisal, which is usually around $400, and you do need an appraisal in order to get a loan to buy a house. The bank wants to make sure that if they're lending you the money, that the house is really worth what you're paying for it. Now, this is mandatory. You cannot get a loan without an appraisal. If you can't afford an appraisal, there are ways to avoid or delay paying it that I can go over with you. Next is your pest or termite inspection, which usually runs about $100. This is optional, but if you're buying an older home, you definitely want to get a pest inspection. And third, you have your home inspection, which usually runs about $300 and up, depending on the size of your house. Again, this is optional, but again, if you're buying an older home, it's probably a good idea. So these are the 3 expenses that you will have to come up with at the very beginning. So next, we're going to cover your loan costs. Now, these are the costs associated with getting the financing to buy your home. Now, these are paid at the end and are usually paid by the seller. So you're not going to have to come up with this money. Typically, the seller will pay it. Now, the loan costs usually run between 1 to 2% of the purchase price. So on a $200,000 house, this would cost between $2,000 to $4,000. Now, the loan costs usually cover things like your loan origination fee, which is also known as points, your processing fee, your underwriting fee, your credit reporting fee, and flood certification fee, a few other little miscellaneous fees. Pretty much everything that your lender has to do to get you the loan. Now, starting January 1st, 2010, the government just made a new rule that says the banks and mortgage companies can only charge you 1 fee for everything. So now, instead of having a bunch of small fees that add up to $2,000 to $4,000, you're only going to have 1 single fee that adds up to that full amount. And this will basically make it easier to shop around and compare different banks, because all their fees will look the same. Now, the good news is, in almost every case, a good realtor can get the seller to pay the loan costs, so it doesn't cost you anything out of your pocket. So these fees I just covered are typically paid by the seller. Now the next group of fees are called title and escrow fees. And again, a good realtor can get the seller to pay all these fees as well. Now these numbers I'm going to go over with you are assuming you're buying a $200,000 house. If you're buying a more or less expensive house, these fees are going to be slightly lower or higher, of course. So first you have the escrow fee, which is the fee the escrow company charges to handle all the money. And that's what the escrow company does. They take the money from the lender and they give it to the seller. And this usually runs about $500. Next we have title insurance, which is insurance that covers you in case there's any fraud involved in buying the house. And this usually runs about $600. Next you have the notary fee, which is about $100, and that's pretty self-explanatory. Then you have the recording fee, and this is what the county charges to record all your loan documents at the close of escrow. And next you have a bunch of smaller fees that the escrow company charges, like a Federal Express fee, a wire fee, a document preparation fee. They usually have a bunch of miscellaneous smaller fees that add up to $150 to $200. Now those are your standard title and escrow fees. However, there are a lot of title and escrow companies that also have junk fees that can also add up to a few $100s. And there's really not a whole lot we can do about those junk fees, but it really doesn't matter a whole lot since we usually get the seller to pay them anyway. So the two types of fees we just covered, both the loan fees and the title and escrow fees, usually add up to about 3%, and that's out of the 3 to 5% I originally told you. So on a $200,000 house, they would add up to about $6,000. And as I said a few times, a good realtor will get the seller to pay that $6,000 for you. Now the third and final fees are called your prepaids and impounds. And these fees usually add up between 1 to 1.5% of the purchase price, which would be $2,000 to $3,000 on a $200,000 house. Now in some cases, the seller will pay these fees as well, but not always. So your prepaids and impounds cover three things. First, they cover your first year of hazard insurance. Having fire insurance is mandatory, and it typically costs between $500 to $700 for your first year. Now, if you're unlucky enough to be in a flood zone, you're also going to have flood insurance, which is also $500 to $700 per year. Next, you have what's called your prepaid interest. Let me explain this to you. Let's say you close escrow on your house on the 25th of the month, and there's 5 days left in the month. Well, the lender does not want to send you a bill for 5 days of interest, and they're not going to let you live in the house rent-free for 5 days. So what they do is they'll charge you that 5 days of interest up front, so you have to pay it at the close of escrow when you get your house. On a $200,000 loan, each day of interest is only about $33 per day. And finally, this is the big one. Your property taxes on a $200,000 house would run about $250 per month. It could be a little higher or lower depending on the area you're living in. Well, the lender is going to be paying these property taxes on your behalf, and so what they do is they collect anywhere from 2 to 10 months worth of property taxes up front, depending on what month you're buying your house. So they could be collecting anywhere from $500 on the low end up to $2,500 on the high end. Now it is possible to get the seller to pay these fees as well, but you're going to need a good realtor working for you. If you don't have a good realtor, you are going to end up paying these fees out of your pocket. If you need a good realtor recommendation, let me know. I do know some real pit bull realtors out there that can pretty much guarantee that they're going to get the seller to pay every single dime of this stuff for you. And that could be really important for you if you have limited funds available. So to summarize, the total closing costs run about 3%, which most realtors can get the seller to pay, and your prepaids and impounds run an additional 1 to 1.5%, which you're probably going to have to pay unless you hire a real pit bull agent that can get the seller to pick up these fees for you. And that's probably not a bad idea if you're trying to get into a house with as little down as possible. So anyway, I know this has been a long video, but I think that pretty much covers everything you need to know about closing costs.